Welcome back to Investing Talk Podcast. We're thrilled you're joining us today for a focused session on understanding what truly matters when a company reports its financial results. If you want more of these insights, please make sure to subscribe, like, and comment. We love hearing from you. And if you're feeling extra supportive, maybe consider buying us a coffee. It really helps us keep these analyses coming your way. Also, very important, if there's a specific company you'd like us to look into for an upcoming earnings spotlight, definitely leave a comment below. Today, we're zeroing in on an important upcoming earnings report, Plug Power's Q2 2025. You've shared some excellent sources with us, and our mission, as always, is to navigate through the details, extract the essential knowledge, and help you feel truly informed without getting bogged down. We'll be looking at everything from analyst expectations to historical performance and what the market might be, anticipating.
Right, and what's fascinating here is that earnings reports are often like a moment of truth for a company. Understanding the context before the numbers actually hit is just crucial for making sense of the immediate aftermath and, well, the longer-term implications, too. For Plug Power, we have a pretty clear picture of what the street is looking for and what challenges the company has been facing. It's quite a story.
Okay, let's unpack this upcoming report then. When exactly is Plug Power scheduled to report its Q2 2025 earnings, and what are the key numbers analysts are really watching?
So Plug Power is set to report its Q2 2025 earnings on Monday, August 11th, 2025. The conference call is expected around 4:30 p.m. Eastern Time. Now, the analyst consensus, they're looking for revenue somewhere around $130 to maybe $134 million. For earnings per share, or EPS, the consensus estimates Q2 EPS at negative $2.15 to negative 16 cents. So another loss expected. What's interesting in the note here is that there isn't really an explicit whisper number circulating for this one, that unofficial street guess. So these consensus figures, they're really the benchmark everyone's watching.
Got it. So a loss is expected, around 15 to 16 cents. What does this all mean in terms of the company's own expectations? Did Plug Power give any specific guidance for this quarter?
Well, that's the thing. In publicly available sources, Plug Power has not provided new formal guidance specifically for this quarter. However, in their last earnings call, they did indicate a focus on sequential top line and operational improvement, getting better quarter over quarter. So that kind of sets the stage for what they're trying to achieve internally, even if they haven't put a hard number on it for Q2.
Right, showing progress, even without a specific target number. Okay, So to understand where Plug Power might be headed, it's always helpful to look back, right? Where they've been. How has their historical earnings performance stacked up against expectations, especially over, say, the last 4 quarters?
Yeah, looking back is really important here. If we connect this to the bigger picture, over the last 4 quarters, Plug Power has actually missed EPS estimates 3 times.
3 out of 4. Oof.
Yeah. For example, in Q1 2025, they reported an EPS of negative $0.21. That missed by a penny. On the revenue side, though, they've generally been closer to consensus. They even slightly beat expectations once or twice. Like in Q1 2025, they reported $133.67 million against an estimate of about $130.92 million. So they can sometimes hit the sales number.
But missing on the bottom line 3 out of 4 times. Okay. And what about the stock's reaction to these past reports? Does the stock usually see significant moves post-earnings?
Oh, definitely. This raises an important question for investors, doesn't it? The stock typically reacts with gaps, big jumps or drops. Often it's to the downside immediately after earnings if the numbers disappoint. While the exact percentage moves aren't detailed right here in our sources, the historical data points to significant volatility, often more than the options market even implies.
So expect fireworks, potentially not the good kind if they miss. Beyond just the headline numbers then, what are the key metric trends that have been developing for Plug Power? What's the story underneath?
Right, looking deeper is key. We've observed some modest sequential revenue growth, which is, something. And while EPS is still negative, it has been narrowing slightly. So maybe tiny steps in the right direction there. However, and this is a big however, gross margins have stayed under pressure, real pressure.
That sounds critical. Why is that?
Well, it's primarily due to hydrogen supply chain challenges and just broader cost pressures. It's expensive to produce and handle hydrogen right now. And on top of that, the company's also faced ongoing negative operating income. Their main business isn't profitable. And continued cash burn. They're spending more cash than they bring in quarter after quarter. These are really crucial underlying financial health indicators you have to watch. Margins and cash.
Margins and cash. Got it. It's not just about the numbers, though. The context around the company is just as vital. Were there any major news items or catalysts for Plug Power during this past quarter? Anything big happen?
Actually, our sources indicate no major new product launches or transformative contracts reported during this specific quarter. The company's focus has largely remained on, well, navigating those supply chain bottlenecks we mentioned and working to improve its hydrogen infrastructure. So it seems like it's been more about operational execution, digging in, rather than big headline-grabbing developments.
Okay, so kind of head down, trying to fix things. And how does the broader sector and the macroeconomic environment play into this? A company like Plug Power and clean energy must be affected by that, right?
Oh, absolutely. It's a huge factor.
Uh-huh.
Clean energy stocks, and that includes hydrogen companies, have been under considerable pressure lately. This is largely due to things like high interest rates, which makes funding big projects harder. Also, just a weaker risk appetite among investors right now. People aren't jumping into speculative growth stories as much. And there's increased competition from, cheaper renewables like solar and wind, and also battery storage solutions getting better.
So headwinds from multiple directions.
Pretty much. Now, long term, things like policy support and ESG investment flows, those remain a potential tailwind. But right now, investor sentiment is cautious, especially for companies that are still burning through a lot of cash like Plug Power.
Makes sense. Given all this context, the performance, the macro picture, what has recent analyst commentary been like for Plug Power? Are they seeing any light at the end of the tunnel?
Mostly no. Most recent analyst commentary has reflected, well, downward pressure on price targets. Analysts are cutting their estimates of what the stock is worth. There are still persistent concerns about cash flow, tying back to those margins and cash burn issues. And there's a perceived need, widely perceived, for future capital raises. Analysts think you'll probably need to sell more stock or take on debt soon.
Which can dilute current shareholders.
Exactly. So the majority of analysts have maintained a hold or even an underweight rating. Optimism seems pretty limited until there's a clearer operational turnaround visible.
Okay, so analysts are cautious, leaning negative. Let's pivot to the technical side of things then. How has the stock itself been behaving leading up to the report? What does the price action tell us?
Yeah, looking at the chart, Plug Power stock has shown, frankly, significant weakness leading into the earnings print. This often reflects investor skepticism about near-term profitability, right? The price action tells a story. Attempts at recovery have generally failed, and the stock is currently trading near multi-year lows. That's pretty telling.
Near multi-year lows. Okay, so what are the key price levels to watch then, both for support where it might stop falling and resistance where it might struggle to climb?
Sure. Key support levels, based on recent action, are around that $1.25 to $1.30 area. Those are the recent lows. On the resistance side, we're looking up towards $1.75 to maybe $2. Those are recent highs, but also a significant breakdown level from earlier in 2025. So getting back above that would be important for bulls.
$1.25 support, $1.75 resistance.
Got it. And how much movement is the options market pricing in for earnings week? What does that implied volatility suggest? The options market, well, it's bracing for a big move. It's pricing in a potential swing of plus or minus 18% to 25% for earnings week.
Wow, 18 to 25%.
Yeah, it's a big number. And it's pretty consistent with the elevated moves we've seen in prior quarters for Plug Power. It basically indicates that traders anticipate significant volatility around the report. They expect a big reaction, one way or the other.
Okay, buckle up then. So let's explore those what-if scenarios. What would constitute a bullish case for Plug Power with this earnings report? What needs to happen for the stock to actually rally strongly?
Right, the upside case. Look, you'd need a strong beat and raise scenario. That means a positive EPS surprise, maybe getting closer to negative $0.10, or even better than that. You'd also need significant sequential revenue acceleration, showing real growth momentum. And crucially, you'd absolutely need to see clear signs of improving gross margins or a definite reduction in that cash burn. That's fundamental.
So real operational improvement, not just headline numbers.
Exactly. And positive commentary helps too, right? Like news about signing new customers, speeding up green hydrogen projects, or really getting costs under control. That could definitely drive the stock higher.
Makes sense. And what about the bearish case? What could cause the stock to fall further, maybe break that support level?
The downside scenario, well, a miss would likely do it. Wider than expected losses, continued or worsening concerns about cash burn, muted revenue performance, especially if it stalls out that sequential growth idea, or, importantly, any kind of negative guidance from the company, if they signal trouble ahead. And any commentary hinting at new capital needs coming soon or, execution hiccups, that could easily trigger a sharp sell-off, especially with sentiment already weak.
So lots of potential pitfalls there. Out of all these metrics, then revenue, EPS, margins, cash burn, guidance, what's the single most crucial thing for listeners to watch when the report actually comes out?
If I had to pick one, it's really two, but they're linked. The growth margin trajectory and the forward cash burn. Those remain the biggest investor focus. Arguably, they're more crucial than the headline EPS number right now.
More important than EPS.
I think so, yeah.
Yeah.
Because they speak directly to the company's path to profitability and its financial stability. Is the core business getting healthier? Can they survive without constantly needing more cash? That's what margins and cash burn tell you.
That makes a lot of sense. Focus on the fundamentals of the business health. Okay, expert speaker. Considering everything we've discussed, the numbers, the history, the sentiment, the technicals, what's your overall leaning or feeling about Plug Power heading into this Q2 2025 earnings report?
Based on the available information, the overall leaning is, I'd have to say, bearish to neutral. Cautious, definitely. If you ask for my confidence score for positive surprise, maybe on a scale of 1 to 10, it's pretty low. Maybe a 3.
Only a 3 out of 10.
Yeah, look, the company is still very much in an operational turnaround mode. They're trying to fix things. Sentiment is poor for these kinds of stocks right now. And there's that continued risk of further capital raises or execution delays. It just feels like the hurdles are high. Now, expectations are low, so surprise rally is always possible, but the risk-reward generally favors caution here, I think.
Okay, bearish to neutral, high degree of caution. So, for listeners thinking about this, maybe considering a trade or adjusting a position, what are some general strategy considerations, keeping in mind different risk tolerances?
Right, strategy depends heavily on your risk appetite, especially with this kind of volatility. For those who are really risk-averse, honestly, avoiding holding common shares through earnings is probably the sensible approach. Just sit it out. For options traders, maybe consider high-premium short strategies like a strangle or straddle, but only if you really know what you're doing and hedge properly. Or just use a very small position size given that huge implied move. It's risky.
Selling volatility, basically.
Yeah, betting the move won't be as big as priced, or that you can capture the premium decay. But it's tricky. If you're more risk-tolerant, maybe you buy some speculative calls or shares, but keep the position size strictly controlled. Or maybe use option spreads to limit your potential downside. Define your risk. The absolute key here is managing risk. Know what you stand to lose because this stock can move violently on earnings.
Manage risk, manage risk, manage risk. Sage advice. Well, that's been a really comprehensive look at Plug Power's upcoming Q2 2025 earnings. We've covered the analyst expectations, the historical performance, the surrounding market context, potential scenarios. The big question moving forward really seems to be how Plug Power addresses those critical gross margin and cash burn issues, doesn't it?
Indeed. It all comes back to that. And this raises an important question, I think, for you, the listener, to consider. How much weight should investors place on a company's operational improvements versus its headline financial figures, especially when it's in a capital-intensive emerging sector like clean hydrogen, still far from profit?
Yeah.
Where do you draw that line? It's something to think about.
A truly thought-provoking question to leave everyone with. Thank you for joining us on Investing Talk podcast. We hope this exploration of Plug Power's earnings outlook has been valuable. Remember to subscribe, hit that like button, leave a comment with your thoughts, or maybe suggest a company for us to analyze next time. And hey, if you appreciate these insights, consider buying us a coffee. The link's usually somewhere below. We'll be back soon with another detailed look into what truly matters in the markets.